Tuesday, July 22nd. Market analysis, Stan Ehrlich. I'm pretty late today, 3 o'clock California time. I try between 1 and 2. We always start out with stock market indexes, go to futures and some stocks in this case. This will be pretty quick today. Frankly, I have not changed my opinion in approximately 2 weeks and have been warning you about markets topping out, and they have not yet, except for the YM and the Russell. They have come down some, but the S&P stuff and QQQ stuff, no. They have made some historic highs and then drifted upward slowly starting a couple of weeks ago since then. Overbought conditions occasionally. This is not necessarily the way a bull market acts. In fact, it kind of loses longer-term momentum by doing this slowly. So I'm continuing to warn you. It's basically the same kind of commentary that I've been coming up with for a week or two, that I'm very concerned about a market dropping down very quickly and sharply, maybe by surprise. That would not surprise me. But if we start getting below, and it looks like we're going to close below today's low, because today's low was lower than a couple days ago, but the closing prices were relatively steady to firm. Not really very strong, but at least back up to around unchanged to higher on the day in some cases, like the E-mini, and decent recovery late in the day. The S&P, of course, did the same thing, SPY, and closed relatively firm at the end of the day. QQQ, overbought for over a week now, 6 full days of trading. And yes, it has made new highs, and yes, it is climbing relatively steadily, but all of a sudden, I would much prefer to buy a break than to buy into something like this, put it that way. The QQQs, not the greatest close. Now, the YN dropped off today, and is steady to a hair lower in the afternoon beginning trading. No sell signals, no reversals. In fact, today's low in the NQ was almost exactly at a little support area from the previous 2 weeks or 2.5 maybe. So it was exactly a spot to nibble at the long side. But again, the bigger picture, I'm afraid these periodic overbought conditions are typical of bull markets, yes, but in different ways. Stronger moves up, pops up, larger moves, and we haven't had any kind of a correction so far. That's worrying me. Now, if we close below 22,778, bye-bye. Next, NASDAQ didn't close that well. Just said that. Now, the Russell, the YM's next, hasn't come close to the top of the market, which was on July 7th. Our ER sell signal on the high day. That's great. So far, perfect. It just hasn't come down very far. And then one downside correction, we've already had a 50% retracement. So in the high to the low. So danger. I continue to talk about that. I don't expect to see a real big popping up rally. If it does, that'll only make me a bit more bearish super fast. Exhaustion gaps. Next. YM, strong close, but not above the previous day's high. We're getting about Russell, not that close to the highs, but not that far away either. Support did hold. We had a sell signal, but it lasted a fraction of a day. It wasn't that big deal. Didn't work very well at all. Here we are, trying to make new highs. Support a little bit below, but there's also a tremendous amount of resistance from previous rallies at where we are, or a little higher, even a minor new high, touching the bottom of this gold area. Okay, Russell closed relatively firm. Now, bonds. PM market is open already. We've got the strong close today and yesterday. Coming out of an oversold condition, I've put in the markings for head and shoulder bottom. This is the neckline. We'll see how it acts when it gets up to resistance. By the time it does, the neckline is going to be probably in it, around 115, a little higher. Very important area. I think we're going to get there. Next, July notes, treasury notes, PM market, tiny bit higher, getting into resistance, closing in the resistance, nowhere near overbought, lots of elbow room to go up, long-term sideways pattern. We could get caught for a top again around 12, 12 and a half. We'll see. Crude, dropping off today quite a bit. PM market just starting. So we're between a rock and a hard spot at the moment. Support below. We bounced off up several times now. Resistance, we can't seem to get through this approximate 67, 68 area. Between a rock and a hard spot. Next is natural gas, which is doing great. This head and shoulder top formation broke out. Had a downside swing, got oversold in the support area, turned around. Had a nice rally back toward the neckline, but not all the way to it. Typical, around halfway is pretty much average. And this was a little more than that. And boom, yesterday dropped off back to support, dropped into support today, and is showing no signs at the beginning of the PM market, which doesn't do much anyway, of doing anything. But this looks like it's going to make a new low. The downside objective is 1.1. Next, heating oil. Big rally up, couldn't hold it. Look at closed poorly yesterday, very badly. And just a moment. We have a sideways market at the moment. Today we dropped down pretty good. Resistance is stopping the rallies. We still have that giant bearish engulfing. So I think day before yesterday, Friday, was the end of a rally, and we're going to start to drift off to the support levels and start to break them. Looking down. Gold popped up. Gaps are almost always closed. Let me put a little marker in here like I usually do for my gaps. That's the bottom, and that's the top of the gap and into the future a bit. So this area we should trade in soon. We're overbought first time, got resistance above, maybe a touch more of a rally, then come back to close the gap, then we'll see. Next, upside gap also, and overbought also in silver. Almost the exact same commentary. Possible exhaustion gaps. Gaps are almost always filled. I'll stick a little marker in there for you as well. And we're doing exactly that for a few days. So next is platinum. Steady in the PM market. Had a little bit of strength today. Doing not much, but steadily working its way higher. A lot of divergence here. Modestly concerned about that. You have no new rally RSI highs since a month ago. And look at all these highs since then. That could be building for something significantly down, but I got no reason to believe it's starting sideways to higher, about the same angle. Next, high-grade copper. Overbought. Might try and double top out, but I think this rally is going to fail. So I'm looking for another swing back down to support 5.46. Maybe even break it this time. Next, soybeans. Dropping off a little. Resistance is stopping the rallies. Between support and resistance, sideways, not much hope for one way or the other. Momentarily bearish. Soybean oil is doing fine. We just made new highs for the head and shoulder bottom formation. We were already 50% up to the minimum objective, which is 62.62, give or take a little bit. So we're having a minor correction here. I don't see any reason for a significant high. I think we're going to be coming up soon, 2-3 weeks maybe, to this resistance area and start to chew into it. Normally the top of a bull move, by the way, would be a very fast big rally, exhaustion strength, exhaustion gaps, that kind of thing. So if we start to see that, especially after we get through this resistance area, then I'm going to start talking about the end of the head and shoulder bottom move. But this is, halfway, normal movement. Support should hold. A little dip down maybe. New high soon. Next. Meal. Got oversold. Moving up a little. I haven't got a lot of hope. The resistance above the market is very substantial. There's no indication at the moment, besides a bit of divergences and a couple of premature bullish engulfing ER buy signals. So, short-term friendly, sort of. Next, corn. not good. Didn't get up high enough to close the gap. It tried. It could do it again. There's no reason for it not to try even 2 or 3 times or more. So 417 and a quarter is not out of the correct question of being a rally high soon. But I don't see any turn. Expecting it to dribble off, maybe make new lows, unless I can justify it starting up to the close the gap. Next, wheat. Outside up day, normally friendly, good. Generally a support area, held, good. New high close for over a week or so, good. Anything super bullish about that? Not really, but I do expect more rally. So this time we're going to come right back up to where we were, 582 and a quarter, maybe a little higher, be a major resistance area. We'll see what happens. You might want to try and call this a broad double bottom over 3 months. But that should be more pronounced. This should be down sharper, maybe a little closer to this old low, but whatever. Shell, rocking a hard spot sideways. Overbought. Apple, expecting a little bit of a dip. Resistance above the market. Next, Tesla, a little rally today. Inside of a pennant formation. Watch for a breakout above the bear trend line or a breakout below the bull trend line. Otherwise, you're proverbially called it between a rock and a hard spot or a bearable trend line. And where you got NVIDIA. It did come back and close a gap. Perfectly. Just nice. Plus a little bit more. That's okay. Test the trend line probably, and that's it. I think now we have a chance to go right back up and maybe make new historic highs soon. Now, if we close below today's lows, we're going to also be closing below a trend line, and that would not be a good idea. Sign of strength, I meant. That would probably be the start of a little bit more of a break. If so, maybe down to 158, 58, and possibly closing these 2 gaps. Don't forget about them. And we're back to the E-mini. You guys have a great day. Profitable trading to you.